commercial life insurance planner, and she is the person of Perpetual Sefakor, Adzraku, who is speaking on achieving financial stability, independence, and freedom leveraging insurance as a student. Okay, so I'll be very snappy with my presentation. So I'm going to take you through the concept of insurance as part of your financial planning. So insurance is a word we often hear, and insurance is a word in our setup, Africa, Ghana, we usually shy away from insurance, probably because of our upbringing and the concept and the understanding. Gradually, insurance is trying to find its way into our system. The coverage is increasing. People are beginning to understand insurance more than it used to. So we are still on our education and sensitization, so that as we grow up, even from now, you can start something small, and it depends on the understanding you will get by way of insurance. So we'll break it down, very simple terms, the issues surrounding insurance. So today you pick something small, then you build on it in future. All right. So why insurance? Basically, insurance because there is a risk. That's all. Insurance because there is a risk. And from morning to evening, when we leave home and we go back home, everything we do has an element of risk attached to it. Now, the issue with this risk is that it is very uncertain. Truth be told, if I know that from here to my way back to my office, if I know there is a risk and I know when it will happen, how it will happen, probably I'll be cautious, or I might not even go back to the office at all. Maybe from here I'll go straight to, or I'll not even go back to my office. I'll even just take a taxi or back to my office. But the point is, usually, in most cases, it is uncertain. So what do we have here? So risk is the uncertain, potentially negative end result of an activity, event, or a venture. An activity, event, or a venture. Now, in very simple terms, the possibility of something bad happening. And this is very uncertain. The word there is uncertainty. Now, what is this uncertain? What do we mean by uncertain? To be unsure. So we all know that something might happen, but we are not sure. The first thing is we don't even know if it will happen or not. Then if it will happen, the when is one thing. The how is another thing. So this is the bit about insurance, and this is the reason why everybody needs insurance. Because this is not just for some people. It applies to all of us. It applies to all of us. It might happen, but when and how we do not know. So if this is the case, then what do I do to safeguard myself? Now, this is where insurance comes in. Now, what is this insurance? Now, insurance is the most widely used risk transfer method. So, in very simple terms, it is the transfer of risk. The risk we spoke about earlier. It is the transfer of that risk to a financial institution. That is all it means. So that thing that might happen, that I am not sure. How do I transfer that risk onto a financial institution that has the ability to take care of this risk financially? Because we can't bring a dead one back. What we can do is the financial implication that comes with that debt is what we can restore. It's what insurance can restore. But we can't bring back the person. So these financial implications that individuals cannot carry on our own, how do we manage it? Just offload it, transfer it to a financial institution that has the models, that has the ability to handle it should that uncertain risk happen. Now, insurance creates room. It creates a common pool from what? From premiums. In very simple terms, again, how does insurance work? So we have about 10 people in the group. Everybody contributes some money, monthly, annually, quarterly. Those monies we call premiums. So we collect all these monies, we put it in. What do we do? These monies are there, waiting that out of us 10, should something happen to one person, we carry this and we sort out that one person. Then that person is what? Is relieved. The beauty of insurance is that it will not happen to all of us at the same time. So as it happens to number 2, all of us go into that, we sort number 2 out. Should it happen to number 9, we go into that, we sort number 9 out. So that is how it works. So all of us are in a pool. We are contributing bits of money called premiums. Then should the risk happen, then we use that to sort out one person, stabilize that person, whilst we continue with the cycle. Alright. Then insurance is suitable for risks that are high or low frequency. As I said, it won't happen to all of us at the same time. And these are risks that are high. There's small risks around us. Those ones we are able to manage on our own. But the big ones, if my car or your car is involved in an accident now, they break. If there is fire outbreak in your home, it's big. So those ones are the things insurance helps what? To reinstate. Now the functions and the uses of insurance. What do we use insurance for? So it serves as a financial security to policyholders by spreading the loss of few over the many. So that's what I said. It's a loss of us, but we are spreading one person's risk over all of us. So it's like all of us carrying a load, rather than one person carrying that one big load. So all of us come together, then to share that risk. So we don't leave that risk on one person. Then it provides us financial security in the form of monetary benefits. So insurance provides the security in the form of monetary benefits because, as I said earlier on, let's say a daddy who is in charge of a home, married with kids, as the man is alive, he pays school fees, he buys food, he pays rent, doing all these things. If that daddy passes on, unfortunately, insurance cannot bring back his daddy. But insurance can bring back the money that he was what? That he was providing. So that is what insurance can do. Then it inculcates in an individual habit of, since we started in saving. So again, in insurance, it has the savings part, and it helps us to learn how to save. Now, functions and uses of insurance, it helps to pay what? Medical expenses. Medical expenses because there are products that pay out when you are critically ill. It provides money for family upkeep. So just like I said, if a daddy or a mommy unfortunately passes on, that death cover provides money for upkeep for the dependents that have been left behind. Then it provides financial support for individuals after retirement. So there are policies that pay out after your retirement, after your 60th birthday. Now, it's used to save towards future what? Educational expenses. So when your kids are very young, you can use insurance as a form of savings for them. So when educational costs become expensive as they grow old, fall into waste money, then it provides funds for funeral expenses. And we know that the funeral thing is more like a fanfare. It's no longer like a joke. When there is funeral, it's like a fanfare. We all talk against it. Yet when it happens, these are few things to note. One, the possibility of one dying young. The possibility of one dying young. So if you are a parent and you die young, what happens to your dependents? Now you getting what? Critically ill and disabled. It is a possibility. At that point, what happens? Now there are lots of cancer issues, kidney issues, a lot of them. Nobody knows what's happening in our era now, but it's happening all over the place. And when it happens, then there is issue in the family. People go to the extent of going to bed on TV and all that. So this possibility is there, and there are policies that are there to take care of this unforeseen event. Then your child goes to college. Once you bring forth, the child will go to college. Whether you are present or after you are born, the child must go to college. What preparation or what foundation are you laying? Then farewell to a loved one. Once you are born, you will die. And when you pass on to your parents or loved ones pass on, what happens? Now it comes in because usually it is unannounced. The passing on phase is unannounced. So you'll be there and these things happen. If there is no money, you sell family property, you go and borrow and do all this fanfare thing. Very, very unnecessary. But you go and borrow money to do it. Then we have your retirement. You will retire. You will not be like this. You will not remain like you finish school, you start work, you grow, then you retire. After that, what happens? Then your legacy. What are you leaving behind for your dependents? So all sort out. Now this is where we are coming from. Perpetual Life Insurance is a life underwriting company. We are a life insurance company. We are number 4. Currently our ranking is number 4. And we have 100 staff and over 2,000 agents across the country. We have 10 branches in 5 regions. So an overview of Prudential Life Insurance. Will your family survive without you? This is a big question. But most of us here are young, so we will say yes. Most of us here are young, so we say yes. But at a certain level, we can't say a simple yes to this answer. Now, these are unexpected events. Car crash, death, all these things can happen. And should they happen, will your family survive in your absence? So if you want them to survive in your absence, it is very simple. As you are going up and down and if you are working, as you are earning income now, the attitude of saving. So this is an angle you can equally save from. A little bit of income put aside for insurance. And this has a risk covering that should something happen, this pay out for you financially. We'll present only 2 products just for you to see how insurance products work. So we have a solution that takes care of critical illness and permanent disabilities. And we have farewell expenses, and we have what? Death. So a policy that has a death cover. That's why I said, should the person pass on, we can't bring back the person, but we can bring back parts of the financial losses. So that is the death cover. And we have permanent disability. Anything can happen. Should you lose one leg, lose one of these, lose 2, however it is a permanent disability. There is a payout for that. Then critical illness, the kidney issues, the cancers, all these ones, they are very critical illnesses that you need a lot of money to help you cure. In these instances, there are insurance policies. Now, insurance is like that. The younger you are, the lesser your premium. Because we use mortality table. Mortality table states that the younger will go, all things being equal. The older ones will leave before the younger ones. That means the risk on the older ones higher than the risk on the younger ones. So the younger you are at the insurance table, the lesser your premium. So it's advisable you start insurance at an early stage. So you pay very little premiums, huge sum assurance, because in that age bracket, your mortality risk is very low. Alright. So we'll look at another product that has an unlimited death cover, global payout for accidental death, total permanent disability again, annual family income benefits. So even in your absence, your family will enjoy annual family income every year, an amount of money paid out to your kids just for their happy for a number of years, even when you are born. Then waiver of premium on the death of the new life. So the main that is alive paying premiums policy is that should the unfortunate event of death happen, then the premium is waived. The business assumes premium payments on behalf of the client until maturity. Then your little kids benefit from it. Then there is a maturity benefit. When it stays on end of policy, end of maturity benefit. Then a 5-year free insurance. So these are products we have as Perpetual life insurance. We have a number of them. Just to give you an overview of how an insurance product works. So this will be the end of my presentation. I will please encourage you that no matter how small, there are a lot of insurance products around. Do what you can, because risk is for everybody, whether you are employed or not. Ask for the risk. It's open to us. It's only the grace of God that takes us out and brings us back. So we always thank Him for it. But all around us, we see these things happening to people. So we don't know when it will be your turn. We always pray in the morning before we set out. But however it is, somebody also pray, step out, and then it happens. So you just don't know. So these avenues are there. Just use some of them, bits and pieces of them, to please place a protection on your life. Most protection is there, but this one is very necessary. Should it happen, as we sit right now, ask yourself, should this happen? Kidney issues, cancer, what will you do? Will you also go to TV and beg? We know our hopes from where we are coming from and all these things. Just look back and ask yourself, should something hit me or hit any of my relatives, will we go out and beg? What will happen? These are avenues we all have to place bits and pieces of risk averse on our lives. But as it is, we really don't like insurance. But now things are getting better. So don't hate it that much. Get closer to it. Ask questions. Upon knowledge, then put